Hello, my name is Keith Harmon from the Law Offices of Andrews and Harmon, here to talk to you today about estate creation and estate preservation. So the major topics I'm going to talk to you about are: what is estate creation, what legacy do you want to create, estate preservation, the tools to preserve an estate, and then the common will versus a more comprehensive will. So the first topic, estate creation. What's the purpose? The purpose is to create a source of income to provide for your family in the future, and also to create a legacy if something were to happen to the breadwinner. So the next section is legacy. The first type of legacy is, the breadwinner didn't really plan for the future, either ran out of time or just didn't think about it or didn't take the necessary steps. The second type of legacy is the breadwinner thought it was important to get some type of policy, so he did purchase something, but maybe it was just a minimum amount to cover the mortgage or just some funeral expenses. And then the last and best type of legacy to create is the breadwinner really believed it was important to create a future for his family, and then they plan to create a good legacy for that family as well. So this type of individual bought enough insurance to do the things that they would have done if they were alive, and by that I mean paying for their children's college, or even paying for the down payment of their first home. This type of individual is also protecting their families from having a diminishing lifestyle. You don't really want your family to have to liquidate the family assets to survive after you're gone. You want to make sure you have enough life insurance and a goodwill to protect them in the future. So the next section is estate preservation, and this section is really just talking about retirement. You want to still create a legacy for retirement, but you also want to make sure that you have income for your future. This type of policy is for you to provide for yourself until your death, because realistically, liquidating your assets as you're trying to use them isn't a valid option. So the next section is the type of insurance policies that you can purchase to help create and preserve your estate. The best type and the ideal situation is whole life insurance. This creates and preserves the estate. It builds a significant cash value, but also has the death benefit on the other end to create the estate if something were to happen to you. It preserves your estate because you have cash value to help take care of your family and take care of yourself in the future. The next type of policy is the return of premium term. After the term period, the return of premium pays all the policy premiums back to you. So you do have estate creation if something were to happen to you, because it does pay out the death benefit if you did pass away, but it also pays the entire premiums back to you if you do outlive the policy. So it's a great type of policy for yourself, and it's less expensive generally than whole life insurance. The next type is the return of premium, or I'm sorry, just a normal term policy. This only creates the estate upon your passing. It doesn't preserve the estate. You don't have any money coming back to you, and you can't borrow against it. So it's still a good type of policy to have, but it doesn't have all the necessary elements of a good estate creation and estate preservation. Next type of insurance is critical illness. This type, it does give you only the estate if you were to become ill. It pays out a certain amount depending on how much you purchase. If you get cancer, stroke, or maybe Alzheimer's. This helps your family pay the mortgage while you're ill, and maybe also take care of them in the future if there's enough money in it. Last section is the common will versus the more comprehensive will. A common will is very simple, and it's usually not very expensive. This type of will can dictate what's going to happen to your family, but also make sure that the money is going in a direction that you deem adequate. You don't really want all of your family fighting over the money if you have a life insurance policy and using up the entire benefits of that policy if that were to happen to you. And then the comprehensive will. This may include a trust or a living will or even advanced healthcare directive. You should have a trust if you have children under the age of 18, and maybe even if they are older than that. The trust can dictate when your children will be paid out on the life insurance policy. You can do it at different stages. If they're 18, you want to give them a chunk of money to maybe use, and because at that age they're probably going to waste. But at that age they can do with it what they'd like, and then maybe a bigger chunk of the money at a different stage or different stages along the way. If you have any questions on these type of policies or the wills themselves, please go ahead and give me a call at 714-262-0798, or you can email me at kph@richardandrews.com. Thank you very much and have a great day.